Welcome to the Deep Dive. Today we're cutting through the noise and giving you something absolutely essential. We're talking about the ultimate evidence-based strategy guide for one of ACCA's most demanding papers, Performance Management, or PM.
And we really recognize that if you're the learner, you are likely wrestling with just a sheer volume of material. You've got complex formulas, you've got abstract models. Our goal today isn't to reteach the syllabus, not at all. It's to fundamentally redefine your entire approach to the exam.
So what have we been looking at?
We've synthesized 5 full years of examiner commentary. We've combined insights from 10 separate examiner reports spanning from 2019 right up to 2024. And we've also layered in the crucial ACCA technical articles.
We basically consolidated all of that data into a strategic blueprint. So you can think of this as the shortcut to understanding what the marker actually wants to see. We've done the forensic work, so you can just focus on executing a winning strategy.
And, if there's one core insight, one single thread that unites all of these documents, it's this. Performance management is not primarily a test of calculation. It is a business communication exam disguised as performance management.
Okay, that's a huge statement. A business communication exam.
It is. And the key to passing isn't writing more. It's about writing smarter. The exam rewards relevant application, efficient structure, and really the ability to act like a concise business advisor, someone who can deliver focused value.
That is the aha moment we need to nail down right now. If you leave this deep dive knowing one thing, it has to be that. So our mission today is clear. We are going to dissect the 5 biggest communication mistakes that students make time and time again.
Then we'll reveal the 5 habits that actually define the top performers. And finally, we'll give you a section-by-section time and structure strategy, something that ensures you can deliver maximum value even under intense pressure.
All right, let's get into it. The first barrier we really need to break through is this belief that PM is all about crunching numbers. It's just not. We have to focus on how you convert your technical knowledge, the stuff you've learned, into professional mark-earning commentary. This paper, it's like a triathlon of application, clarity, and of course, time control.
That's a perfect way to put it. And if we break down where the marks truly lie, and this is based on consistent feedback from the examining team, we arrive at a breakdown that I think challenges the way most students study.
Okay, what's the breakdown?
TM is approximately 50% analysis and interpretation, 30% structure and communication, and only about 20% raw memory and calculation.
Wow, okay, that is a staggering ratio, especially when you think about the average student who is probably spending, 80% of their study time trying to memorize complex variance derivations or every single step of a budgeting system.
Exactly, and this raises a really fundamental strategic question for you. If raw recall only contributes 20% of the value you deliver in the exam hall, why on earth would you let it dominate your preparation? The majority of your marks, a full 80%, come from what you do with that knowledge.
Right. It's about connecting it to the unique business scenario they give you.
That's the analysis part. And then presenting it clearly, which is the structure. The focus has to shift from knowing everything to flawlessly applying the relevant knowledge.
So the goal is moving from passive recall to active application. And that 30% dedicated to structure, that's huge. It's almost as valuable as the calculation itself. So why is a professional structure so crucial in this specific exam?
It's because the marker is under really intense time constraints. The examiner reports consistently, sitting after sitting, use the phrase walls of text to describe low-scoring answers.
A wall of text, I can just picture it.
You can. And when a marker gets this sprawling narrative essay that just blends theory and calculation and conclusion into these huge paragraphs, they have to work incredibly hard to find the valid points and award the marks. They have to dig for them.
And they just don't have the time.
They don't have the time or the energy. High scorers, on the other hand, they understand this. They know they are writing for a marker on a timer, and they strategically make it effortless for that marker to reward them. Clarity equals marks. It's that simple.
I see. So the structure itself is actually a form of value delivery. If I'm a business consultant submitting an advisory report, my client doesn't want to have to dig through 3 pages of unstructured prose. They want headings, bullet points, and a clear recommendation at the end.
Precisely. You have to think of yourself as a consultant, and the marker is your busy, demanding client. And this means you've got to adopt professional formatting instantly, especially in that big 40-mark constructed response section, Section C.
So what does that look like in practice?
It means using strong descriptive headings. It means using bullet points extensively. If you have 4 separate points to make about the limitations of a budget, guess what? Each of those points gets its own bullet. And keep paragraphs short. Ideally, 2 to 3 lines, max.
That professional layout makes sure your analysis is visible,
Right.
right? It's scoreable, and it just shows you're competent.
It does. And this mindset shift, understanding that structure is not some nice to have, but a necessary 30% of your grade, is absolutely foundational to passing.
All right, let's unpack the common pitfalls then. The examiner analysis, it pinpoints 5 recurring communication failures that consistently hold students back. And as you said, these are not usually calculation errors. They are errors of strategy and delivery.
Yes. Let's start with the most common one, which is essentially students writing excellent material that the examiner simply cannot mark because it's irrelevant to the case.
So, mistake number 1.
Mistake 1, overwriting and missing the point. We call it the scenario link failure. The problem is what the examiner frequently calls generic answers. Students panic and they just write everything they know about a topic, hoping one sentence somewhere hits the target.
And they fail to actually address the requirement, or they don't link it back to the specific facts and figures in the scenario.
That's the crucial part. They don't link it back. I imagine this happens a lot when students are asked about, say, activity-based costing or ABC. They'll describe the 4 levels of the cost hierarchy perfectly, but they never once mention the company in the case study.
So what's the fix? The smart fix, as you call it.
The smart fix for this error is mandatory and concise linkage. For example, a low-scoring student might write a whole paragraph defining ABC and its benefits. Generic stuff. A high scorer jumps straight to the application. They'd write something like, the ABC analysis derived from the scenario figures shows that product Z has low profitability.
Okay, specific.
Due to the high volume of machine setups, indicating an excessive batch-level cost relative to its sales revenue. Therefore, management should consider redesigning the batch process or increasing product Z's unit price.
And look at the difference there. You included 3 specific pieces of scenario information. Product Z, machine setups, and batch level cost. That immediately converts a general definition into mark earning value.
Exactly. Which brings us to mistake 2, theory dumps instead of application. Now, this is related to the previous point, but it focuses specifically on strategic models, things like the balanced scorecard or transfer pricing rules. The examiner reports frequently state that candidates define the models flawlessly, but just never apply them to the company's specific situation, and they score very poorly for it.
So if I get a question on the balanced scorecard, I shouldn't just start by listing all 4 perspectives: financial, customer, and so on.
You can mention them very briefly. That's your 20% memory component. But the value, the 80%, is in the diagnosis. Our guiding ratio for this is theory equals 1 line. Scenario application and diagnosis equals 3 lines.
1 line of theory, 3 lines of application.
Yes. Do not define the balanced scorecard. Diagnose the company's gap. A low-scoring answer might say, the balanced scorecard covers financial and non-financial aspects. A high-scoring application would be something like, a critical weakness of the company's current performance metrics is that they ignore the customer perspective.
Okay, you're identifying a problem.
And this is evidenced by this scenario's reference to high customer churn. This misalignment suggests the need for a BSC redesign focusing on customer satisfaction metrics like repeat business rate and complaint resolution time. You are using the model to fix the company's stated strategic problem.
That makes perfect sense. Okay, that brings us to mistake 3. Confusing calculations without explanations. I think this is a big one. The technical failure of communication. Students do the math, they get the right variance, and then they just stop.
And that's a major failure in delivering value. A number on its own is meaningless to a business manager. It doesn't tell them what to do. The marker wants to know what action the calculation prompts. The smart fix here is mandatory, immediate interpretation. After every single numerical result.
Every single.
Everyone, whether it's an adverse labor efficiency variance, a high return on investment, or a low expected value, you must write a follow-up line explaining the implication.
Can you give me a simple example of that kind of interpretation?
Sure. Let's say you calculate a sales volume variance of negative $20,000, an adverse variance. You don't just write $20,000 adverse. That's not enough. You must add something like, this adverse sales volume variance of $20,000 indicates falling demand or perhaps over-optimistic budgeting, suggesting management must investigate competitor pricing or sales force effectiveness immediately.
So you move from the number to the cause and then to the action.
Precisely. Now on to mistake 4, which is purely about structure, not structuring answers for easy marking.
I want to challenge this one a bit. If time is so tight, you've got 70 minutes for 40 marks in section C. Isn't spending that precious time on neat headings and bullet points a bit of a luxury.
That's a really common misconception, but it's actually backward. Professional formatting saves you time and it guarantees you marks. The examiner hates that wall of text because they have to reread sentences multiple times to isolate the mark-worthy
They're
points.
doing the work for you.
They are. But if you use headings like implications for transfer pricing and recommendation for performance measures, the marker can instantly see you've covered all parts of the requirement. And furthermore, if you use bullet points and the examiner is looking for, say, 4 weaknesses of zero-based budgeting, they can literally tick off those 4 points immediately.
Even if one of them is a bit weaker than the others.
Exactly. Unstructured narrative forces them to hunt for marks, and they might miss a perfectly valid but poorly hidden point. Structure is an efficiency tool for both you and for the marker.
That really makes sense. It's an investment in the marking process. Okay, finally, mistake 5. A weak link between performance measures and business objectives. This sounds like a lack of strategic commercial awareness.
It absolutely is. The examiner frequently observes candidates recommending generic financial KPIs, like profitability or ROI, when the scenario specifically states the company's strategic focus is something else. Maybe it's rapid market penetration or improving their environmental sustainability.
So if the company is explicitly losing market share because of quality issues, just recommending standard revenue targets shows you haven't grasped the core problem.
Exactly. So how do top performers fix this? They ensure the recommended KPIs are highly applied and strategic. If the objective is to address quality issues, you must recommend measures like first pass yield or cost of quality, specifically external failure costs, or maybe customer complaint reduction rate. You have to demonstrate that you understand performance management is a tool to execute strategy. Always relate the measure back to the specific strategic challenge described in the case study.
Okay, so we've established the big mistakes. Now let's flip the script.
Yeah.
The examiner reports don't just criticize. They actively highlight the distinguishing characteristics of high-scoring papers. These are the 5 habits that prove you are delivering professional value. This is where we learn how to truly stand out. What's habit number 1?
Habit 1. Scenario-based application of models, moving completely beyond definition. High scorers never just define a technique, they immediately use it as a diagnostic tool. Take something like relevant costing. A low scorer will define the future and incremental cost test. A high scorer applies it.
How so?
They'd say something like, the existing inventory of raw material X should be valued at its net realizable value of $5 per unit, as this represents the opportunity cost of internal use, rather than the original purchase price of $10, which is a sunk cost. They incorporate the model's logic directly into the decision-making context of that specific company.
So application isn't an optional extra, it's the entire point. What about the quality of the analysis itself?
Well, that's habit 2. Concise evaluation, not description. It's about showing judgment. Top performers demonstrate judgment. They don't just list a bunch of pros and cons. They weigh them up and offer a justified conclusion. Good evaluation requires offering a structured recommendation.
That structure is vital, isn't it? So how do we build that justification quickly in the exam?
A great, simple structure is this. State the proposition, let's say, use residual income, then provide a strength, then identify a weakness, then explain the commercial impact of both of those, and finally give a clear recommendation.
Strength, weakness, impact, recommendation.
Let's try it with outsourcing. The strength of outsourcing is the immediate reduction in fixed overhead and risk exposure. However, the weakness is the potential loss of control over quality. The commercial impact is a short-term reduction in cost, but a long-term risk to brand reputation. Therefore, we recommend outsourcing non-core functions only. That demonstration of balanced judgment earns very high professional marks.
And that trade-off is often missing in weaker answers. They just seem to favor the cheapest option without thinking about the commercial reality.
That's it. And this leads to habit 3, which is all about presentation, professional formatting, and headings. As we've already discussed, this is absolutely non-negotiable. High-scoring papers use professional headers like report on variances or strategic implications. They use vertical spacing, white space generously. The visual presentation itself reflects professional competency.
I remember hearing an anecdote about a marker who said they subconsciously start marking a paper higher when it just looks clean, because a clear layout suggests a clear thought process.
It's absolutely true. You are signaling competence before they even read your first word. You're eliminating resistance. If you have a calculation, put it in a box or use a double underline for the final answer. Treat it like a document that's going to the boardroom, not like a scratch pad.
Okay, let's link this back to the numbers now with habit 4.
Habit 4. Numerical analysis plus commentary. The follow-up line. We've stressed this, but top performers, they automate this habit. Every single calculation is followed by a narrative sentence. For example, when you're analyzing a profitability ratio, you don't just state it.
You explain it.
You explain it. The division's ROI of 12% is significantly lower than the cost of capital of 10%. This indicates the division is only marginally adding value to shareholder wealth, potentially requiring divestment or restructuring. You frame the number within a commercial decision-making context.
And the final habit, habit 5, balanced in commercial reasoning, this seems to capture the essence of what it means to be professional.
It does. It requires you to recognize that the solutions in performance management are rarely just black and white. Top answers consistently demonstrate strategic awareness. They acknowledge the trade-offs. For example, if a question suggests implementing a really detailed new management accounting system, a low scorer will just praise its precision.
But a high score.
A high scorer says, while this new system offers granular cost control, its implementation must be balanced against the administrative cost and the risk of demotivating managers through excessive monitoring. They integrate strategic constraints and human behavior into the financial analysis. That holistic view is what the examiner recognizes as true professional judgment.
Right. Time control. It's the silent killer in PM. You have to approach the 180 minutes with a fixed structure and a clear understanding of what each section demands. Let's break down the strategy.
The 1.8 minutes per mark rule is the standard starting point, but you have to allocate it strategically. Section C, for example, demands more mental energy and professional marks. It just requires a disproportionate time allocation.
Okay, let's start with Section A, objective test questions. 30 marks. We're allocating a maximum of 35 minutes here.
Yes, and the goal here is speed, accuracy, and minimizing the traps. The risk in Section A is twofold. First, spending way too long on a complex calculation. Second, getting caught by theory definitions that sound very similar.
So what's the smart fix?
If a calculation is taking you more than 90 seconds, mark it for review and move on. Do not waste time chasing small marks early on. For the theory questions, focus on recognizing and eliminating the incorrect options. You need to have the precise definitions of terms like relevant cost, limiting factor, or throughput ratio absolutely locked down. These appear frequently in both A and B.
Okay, moving to Section B, objective test case scenarios. Another 30 marks, and again, we're targeting 30 to 35 minutes.
This section is the bridge between rote learning and application. The big risk here is treating the 5-question mini-case as 5 isolated, separate questions. You absolutely must read the whole scenario first. Identify the company's industry, its goals, its constraints.
What kind of topics come up here?
This is where things like activity-based costing, quality costing, and learning curve scenarios are very common. The key is applying the data they provide only to the relevant theory. For instance, if the case describes high setup costs, you know the next few questions will likely test ABC logic.
So it's like a rapid-fire strategic analysis before you even attempt the questions themselves.
It is. You're looking for context clues. Are they a hospital? Okay. Then you focus on non-financial performance indicators and quality costs. Are they a manufacturer with inventory problems? Then you focus on relevant costing and inventory valuation. Identifying the business context is the fastest way to narrow down the correct theoretical framework to use.
And now for the heavy lifting. Section C, constructed response, 40 marks. We're allocating 70 minutes here. This is the make-or-break section where structure and judgment really win you the paper.
70 minutes, yes. And this is where you must dedicate 3 to 5 minutes purely to planning before you write a single word. That planning time is mandatory. You have to break the requirement down into its distinct sub-requirements.
For example?
For example, calculate the variance, discuss the limitations of RI, recommend appropriate KPIs. For each of those sub-requirements, you assign a clear heading, and you mentally allocate your marks and your time.
And what should that structure look like, practically speaking?
It should look like a formal report or a memorandum. You need a brief introduction stating the purpose of your report. Then, use numbered headings for the analysis, like 1. Analysis of cost variances, 2. Evaluation of divisional performance. And within each of those sections, you embed your calculations, followed immediately by the interpretation, and you use bullet points for your narrative discussion.
And a conclusion.
A clear conclusion or summary of recommendations at the end. Remember, the examiner is specifically looking for that professional output on topics like the balanced scorecard, decision-making under uncertainty, and transfer pricing.
So when you're facing a major calculation, let's say it's complex variances or an expected value tree, How should a student manage their time within those 70 minutes to make sure they secure both the calculation marks and those highly valuable interpretation marks?
They need a segmented approach. If a question is worth, say, 15 marks, and you think 5 marks are for the calculation and 10 are for the narrative, you cannot spend 10 minutes on the math. You should aim for 5 to 7 minutes on the calculation, securing the bulk of the numerical marks. And then you spend the remaining time, 8 to 10 minutes, exclusively on the narrative part.
So even if your calculation is slightly off.
Exactly. Even if it's a bit off, if you carry that error forward correctly and you provide excellent commercial commentary based on your resulting figures, you maximize the narrative marks, which are often easier to secure and less volatile than just the calculation marks alone.
Okay, we have to prioritize. Based on the persistent appearance of certain topics over the last 5 years, let's talk about a priority map. These are the high-frequency topics that demand exceptional narrative delivery.
Yes, these are the topics where the examiner is looking for the deepest level of application and commercial insight.
So what's at the top of the list?
Number 1, always, is variance analysis. It appears in almost every single sitting, often split across Section B and Section C. The numbers are usually simple, but the examiner cares 80% about the interpretation. You must move past simply saying adverse or favorable.
You have to categorize it.
You have to categorize the variance. Is it an operational issue or is it a planning failure? And then you suggest management action. For instance, an adverse material usage variance might be operational wastage, poor handling, but an adverse planning variance suggests a fundamental issue with the standard cost assumptions in the first place. That distinction is where the high marks are.
Okay, second.
The strategic cornerstone. Balanced scorecard and performance evaluation. This is a guaranteed high mark Section C question. Students have to be prepared to critique existing performance measures and then redesign them using strategic models like the BSC or the performance pyramid or even Fitzgerald and Moon's building blocks. The discussion has to be strategically aligned. If the company is focused on long-term growth, you must highlight how the current metrics, like short-term profitability, are failing the learning and growth and customer perspectives.
Right. And third, that tricky duo of transfer pricing and divisional performance.
The math here, calculating the maximum or minimum transfer price, it's usually quite straightforward. The marks are lost on the narrative interpretation. The examiner wants to see a discussion of the qualitative factors. How does the chosen transfer price affect managerial motivation? Does it promote goal congruence?
Goal congruence being the divisional goal, aligning with the overall company goal.
Exactly. And why might residual income, RI, be better than ROI in this specific scenario? You have to focus on the behavioral consequences of the management accounting system you're recommending.
Okay, fourth on the list.
Risk and uncertainty. This often involves things like decision trees or expected value, EV. The trap is stopping at the number. The examiner wants structured logic and an explanation. For example, why is EV only appropriate for high-frequency or repeated decisions? What is the drawback of using EV for a once-off critical strategic decision? You have to demonstrate the judgment that accompanies the calculation, often linking it to whether the management is risk-averse or risk-neutral.
And finally, a guaranteed structural question. Budgeting systems.
Yes. Whether it's zero-based budgeting, rolling budgets, or beyond budgeting, you must evaluate their strengths and limitations based on the scenario's context. Don't just define ZBB. Argue whether it is appropriate for a stable, highly regulated company versus a dynamic, decentralized tech startup.
Now, let's talk about the secret weapon that ACCA provides, the technical articles. The sources suggest these aren't just reading material. They are mark-earning tools that let you drop in advanced commercial concepts.
This is where you demonstrate professional depth. The articles provide the specific vocabulary and advanced arguments that the examiner is actually grading against. Let's dive into 4 critical ones.
Okay, what's first?
First, the Beyond Budgeting article from 2022. Traditional budgets are rigid, restrictive, they encourage short-termism or budgetary slack. Beyond Budgeting suggests a framework based on decentralized adaptive planning. So when you're comparing budgeting systems, instead of just saying traditional budgets are bad, you should say something more sophisticated.
Like what?
Like, traditional fixed budgets restrict the organization's ability to respond quickly to market change, whereas the principles of Beyond Budgeting promote adaptability and decentralized coordination, making it ideal for the rapidly evolving market detailed in the scenario.
Wow. Yeah, that immediately elevates the discussion from a student answer to a consultant's report. What about the one on relevant costing in 2020?
That article is foundational for all short-term decision-making. It reinforces the 2 tests. Is the cost future? Is it incremental? Students often fail to identify opportunity cost. For example, if raw material X has no external market, its relevant cost for a new contract is zero, even if it costs $10 per unit originally.
But if it could be used elsewhere.
But if that material could be used in another contract, its relevant cost is the contribution lost from that alternative use. That's the opportunity cost. So you must explicitly state the structured logic. The original $10 purchase price is a sunk cost and therefore irrelevant. The relevant cost here is the $5 contribution foregone on Project B, which is the opportunity cost.
Okay, third, the performance measurement article from 2021.
This one is crucial for critiquing measures like ROI. The article details the behavioral implications. You must discuss how managers, when evaluated solely on ROI, might be discouraged from accepting profitable investments if those investments happen to lower the division's average ROI. This creates goal incongruence. You can use the article's language to suggest that the reliance on ROI incentivizes short-termism, potentially leading managers to overlook necessary long-term investments in R&D or employee training.
And finally, environmental management accounting from 2019. This feels very relevant to a lot of modern corporate scenarios.
It absolutely is. You need to define EMA briefly. It categorizes environmental costs into prevention, detection, internal failure, and external failure. The value you deliver is in connecting these costs to strategic gain. For example, while increasing prevention costs, like better waste management systems, raises immediate expenses, this investment reduces external failure costs, like fines and reputational damage, in the long term, enhancing brand value and customer loyalty.
You're showing that you understand sustainability is a performance driver, not just a compliance headache.
Exactly.
And the ultimate pro tip for those professional marks: integrate these insights naturally. The source material advises that dropping in phrases like, as supported by ACCA's technical article on, when you're justifying these advanced ideas, shows range and sophistication. And that's what can push your grade into that high professional mark band.
Absolutely. Which brings us to our final section. To succeed, you have to replace academic jargon with the precise, decisive language of a business advisor. We're now going to focus on some template language phrases that increase clarity, precision, and mark earning potential in Section C.
Let's do it. Let's start with performance evaluation language. How do we professionally critique these models?
You should always frame your critique around strategic alignment and behavioral consequences. Instead of vague complaints, focus on the impact. For the balance scorecard, you could say, the current KPIs exhibit a high degree of financial bias, failing to incorporate leading indicators from the customer or internal process perspective, thereby risking long-term strategic imbalance.
That's very precise. What about for ROI?
When you're critiquing ROI, be specific about the managerial behavior it might provoke. Say something like, while the division boasts a strong ROI of 18%, this measure may discourage management from accepting profitable new projects that only yield 15%, even if 15% is higher than the company's 10% cost of capital. This creates suboptimal decision-making.
And if you're praising residual income?
State its advantage clearly. Residual income is superior as it encourages goal congruence, rewarding managers for accepting all projects that return above the cost of capital, regardless of the division's average return.
Okay, next up, variance analysis commentary. We established this is about mandatory interpretation.
So you need to use language that suggests a cause and a remedial action. You move past the calculation to the operational route. For example, a favorable material price variance of $5,000 may be due to astute bulk purchasing discounts, but management must investigate if this reflects a trade-off resulting in a lower quality input, which could explain the adverse material usage variance.
So you're linking two variances together. That's a much deeper analysis.
Exactly. Or another example. An adverse labor efficiency variance suggests inefficiencies like poor workflow management or inadequate staff training, requiring an urgent review of production scheduling.
Perfect. For transfer pricing and divisional performance, the focus is purely commercial and behavioral commentary.
Yes, your language needs to show that you understand the politics of decentralized organizations. For transfer pricing, always discuss the impact on motivation. Adopting a cost-plus transfer price may demotivate the selling division by failing to reward efficiency gains, leading to friction and distrust between divisional managers. And your conclusion should always prioritize goal congruence. Quote, using a negotiated transfer price is recommended here as it ensures that the internal transfer occurs at a price that maximizes group profit while maintaining divisional autonomy.
And what about sophisticated budgeting commentary?
You need to weigh the benefits against the limitations based on the scenario's stability. For a flexible system, you might say, a fixed budget quickly loses relevance when the actual activity level deviates from planned capacity. A flexed budget, however, provides a more meaningful and controllable comparison by adjusting budgeted costs to the actual output volume achieved.
And for something like ZBB,
Zero-based budgeting enforces rigorous resource allocation by requiring justification for all expenditures from a zero base. Yet its rigorous implementation cycle means it is prohibitively time-consuming and expensive to apply annually across large organizations.
okay, finally, decision-making under uncertainty. This demands clear judgment about risk.
Your analysis has to go beyond simply identifying the highest number. You have to discuss the model's limitations, for expected value, you'd say.
Right.
While the EV approach provides the most probable return of X dollars, it is a statistical average that may never actually be achieved in a single decision. Therefore, a risk-averse manager, faced with a potentially catastrophic loss, may opt for the safer strategy despite its lower EV.
You're demonstrating an understanding of how real human risk preferences actually influence the financial result.
That's the key.
This language just reinforces that core rule. Theory plus detailed scenario application plus a commercially focused conclusion equals full marks. You're shifting from proving you know the content to proving you can apply the content to deliver real value. We have spent this deep dive focusing intensely on execution and communication strategy. If you take just one thing away, it should be that the ACCA Performance Management exam is fundamentally a test of your ability to synthesize information, structure an argument, and write like a professional advisor delivering value.
Remember that strategic mandate. Structure is worth 30% of your grade. Explain every single calculation. Apply theory directly to the unique facts of the scenario. And adopt the 5 habits of top performers, especially balancing financial metrics with genuine commercial reasoning. This approach is designed to convert the knowledge you already have into tangible high marks.
And this strategy is powered by the insights of the SmartPass team, who are dedicated to accelerating ACCA success through strategic, targeted preparation. If this blueprint for writing smarter resonated with you, and you want continuous targeted guidance for your entire ACCA journey, please subscribe to the ACCA SmartPass channel for continued support and success strategies.
You now hold the blueprint used by high scorers. Go forward with confidence, knowing the examiner is looking for professionals, not rote memorizers.
That brings us to our final provocative thought for you to chew on. The ultimate test of value delivery in PM is clarity. If you can write your answers so clearly and so professionally that the marker can just skim it, identify every single mark point, and score it fast, you have done your job. So what commercial context are you failing to include in your very next practice answer? Go elevate your performance and show them what performance management really means.